You are looking for financial freedom and passive income and to get out of that rat race. And you've heard about dividends, so you came to the right video. I was just like you, and as soon as I heard about dividends, I was hooked. And then when I started getting my first dividend payments, that's when the fun really started. You value your time and independence more than any paycheck number, and rightly so. Money is cool, but the ultimate flex is to be able to pick and choose what you actually do each day and to live life to the fullest. This is for building long-term wealth, and so we're not just looking for a lottery ticket and for to get rich quick. So you need to be looking at things much differently than just the highest dividend yield. There's definitely a bit more to it, and so this video is going to highlight the top 10 dividend stocks that I think that every investor should have in their portfolio. And I'm going to show you how these picks make it so that you're very diversified and you don't have all your eggs in one basket. As always, I started the research off for you because my name's Professor G, and this channel was built to make all things investing simplified. So like I said, we're looking for a couple of things for this foundational group of stocks. This should be like when you're building your house, you want to build it on a firm foundation and not on sand. Because when hard times come, they come like a big wave. And if you're not built on that foundation, that house ain't sticking around. And we're definitely seeing that right now in this market downturn. And coming in at number 10 on my list of top 10 dividend stocks is Procter & Gamble, PG. The Procter & Gamble company is focused on providing branded consumer packaged goods to the consumers across the world. The company operates through 5 segments, which are beauty, grooming, healthcare, fabric and home care, and baby, feminine, and family care. It offers products under the brands such as Head & Shoulders, Herbal Essences, Old Spice, Gillette, and more. Now, P&G has increased its dividend every single year for the past 66 years. That's just pure consistency. And that's what makes this a dividend king. And I don't think that a lot of people understand how insane this is. First off, a dividend king is one who has increased their dividends consecutively each year for over 50 years, and a dividend aristocrat is one that has increased their dividend consecutively each year for over 25 years. Your dividend portfolio should have a healthy mix of these companies as a foundation if you're looking to build true long-term wealth. P&G is in the consumer staple sector, and they have a current price of $150.44. They're down 7.65% year to date, and they have a dividend yield of 2.43%, which means that for $10,000 invested into this stock, you will earn $243 annually. But remember, what's so amazing about these companies that have consecutively raised their dividend every single year is that when you invest in this company, you're investing at a certain dividend yield, but the longer that you stay invested with them, the more that dividend's actually worth and the more you get paid. So you definitely want to find these types of companies that have this long-term consecutive annual dividend growth. And lucky for you, this list has a bunch of them. Number 9 on my list comes from the healthcare sector, because in a time of recession, or just really any time, making sure that you have healthcare somewhere in your portfolio is very important for you to have that nice consistency. And this company is called AbbVie Inc., ABBV. Spun out of parent company Abbott Laboratories in 2013, ABBV has more than tripled to outperform the remaining ABT business. AbbVie has worked hard to keep its product pipeline full of profitable treatments, including the company's Freestyle Libre glucose monitor for type 2 diabetes patients, which should hit $4 billion in sales this year. No matter what's going on in the world economically, people will need these products. This company's increased their dividend every single year for 50 years, and they have a current price of $160.48. They're up year to date at 18.5%, and they have a dividend yield of 3.69%, which means that if you had invested $10,000 into this stock, you would get $369 annually. This next one, in number 8, is in the energy sector, and just like healthcare, energy is nice and consistent no matter what's going on economically. And this company has consecutively raised their dividend every year for 40 years, which is a very long time. This company is an oil and gas company, and so of course that's a tough subject with electric vehicles and solar getting so much popularity, but we're starting to see a lot of problems with the power grid and with going all electric. So I don't think oil and gas is ever going to totally go away, and so since this is one of the kings in that space, I definitely like this one. This company is ExxonMobil and has a current price of $104.70. Now year to date, it's up a crazy 64%. which is definitely amazing, but it's also something that you should be careful with. Anytime that a company has grown that much, I am just weary about buying it at the top. So maybe on this one, watch it for a little bit. But as far as energy is concerned, this is one of my favorites. And it's just a company that's been around for a very long time. And with that consecutive dividend increase, I just trust this company. ExxonMobil has a dividend yield of 3.48%, which means that for $10,000 invested in the stock, you're gonna earn $348 annually. ExxonMobil Corporation is engaged in energy business, and the company's principal business involves exploration for and production of crude oil and natural gas, and the manufacture, trade, transport, and sale of crude oil, natural gas, petroleum products, petrochemicals, and a range of specialty products. As we've seen over the last year or two, people still need to get around even with high gas prices, so it's kind of one of those things that's a need, and I like to invest in companies like that. The next company on this list is one that you're going to be very familiar with and almost everybody uses on a daily basis, and this one is Johnson & Johnson. Remember, like I said at the beginning of this video, these companies aren't the craziest or the most fun, but they are the ones that are going to get you consistently to build that generational wealth. Warren Buffett says, when we own portions of outstanding businesses with outstanding managements, our favorite holding period is forever. We need to be looking for companies that we can hold forever. And Johnson & Johnson is the perfect one for that. Johnson & Johnson has a great resume when it comes to why you should buy and hold this stock forever. It's among the 10 largest stocks on Wall Street, and it's one of just 2 US corporations with the top AAA credit rating, with Microsoft being the other. More importantly for income investors, it has raised its dividend for an amazing 60 years running, with a dominant consumer health business that includes Tylenol and Band-Aid products, as well as high-margin drugs and medical devices. This stock is deeply embedded in the healthcare system. Unfortunately, people get sick all the time, and so they're going to need certain products that Johnson & Johnson is the king of in this healthcare sector. Johnson & Johnson has a current price of $175.67. They're up 2.4% for the year, and their dividend yield of 2.57%. For $10,000 invested in this stock, you will earn $257 annually. Moving on to number 6 on my list. Now you're starting to see the types of companies that I'm picking for this specifically foundational top 10. And so another thing that I really like to think about for me personally is, does this company have a solid competitive advantage, and do they have customers that will shop at this place forever no matter what? And at this company, there are some die-hard fans that will never shop anywhere else. Now everyone knows Target, but they don't know how solid of a company it actually is. To me, this is one of the most exciting on the list, because not only will its dividend continue to grow forever in my opinion, but also its share price, the actual company itself, should grow phenomenally over the next 20 to 50 years. What is most attractive about Target, aside from 50 years of dividend increases, is that annual earnings are expected to grow at 19.6% per year over the next 5 years. Target is in the sector called consumer discretionary, and its current price is $146.45. Now year to date, it's down 37%. Which is a lot. That is down a lot, and this seems like a perfect time to be scooping this stock up. Target has a dividend yield of 2.95%, which means that for $10,000 invested into this stock, you will earn $295 annually. Like I said, one of the big things that I look for when I'm choosing to buy a stock, especially one that I want to keep forever, is how good is that company and how strong are their customers. All right, now we are on to the top 5, and sitting at number 5 for me is one of the most exciting stocks that there is, especially in dividends, because this one is super constant and consistent and almost has a monopoly, or really duopoly, over this entire industry, and they pay such a high dividend. And also real quick, at the end of this video, I'm going to fill you in on exactly how I'm going to be investing for this 2023 year, and exactly what types of stocks and ETFs I'm going to be including in my portfolio moving forward. So stick around to the end for that. AT&T is a stock with staying power, and it recently spun off its stake in Warner Bros. Discovery Inc. to pay down debt and focus on the core business of telecom. As a classic risk-off stock with a generous dividend and staying power, this is definitely the kind of income investment you want to buy and hold forever. And obviously I don't have to go too deep into AT&T because you know what it is, but it's in the utility sector and its real only competitor is Verizon. AT&T has a current price of $18.49. For the year, it's down 3.65%, and it has a dividend yield of 6%. That is a huge dividend for such a consistent and large company. That means that at $10,000 invested, you would get $600 per year. Coming in at number 4 is in the financial sector, and just like healthcare and utilities, this is another one that is very, very solid for you to have in your portfolio. When most investors think about financial stocks, they usually think about investment banks. However, Prudential offers a much more subdued and reliable option in the sector. While it does offer wealth management services, its bread and butter comes from life insurance and benefit administration for corporations. There's not the potential for massive home runs when you're helping small businesses manage their 401k plans or providing disability insurance, but there's also far less chance of running into any bumps in the road. And just like the theme has been for all of these stocks, we don't care that much that they're going to go straight to the moon. We care more that they're not going to lose money and they're not going to be a risk for your portfolio. PRU stock is very stable as a result, and dividends have soared from $1.60 annually in 2012 to $4.80 presently. That's the kind of income you're looking for in a long-term stock. The current price for Prudential is $97.87. For the year, they are down 10.96%, but they do still have that monster dividend yield of 4.9%. This company has a consecutive annual dividend growth of 13 years, and I definitely expect that to continue. Number 3 on my list is very similar to that of Target in that I'm looking at the customer, and this company has a very sticky customer that isn't going anywhere soon. These people will put this product above necessities like food and water, probably even oxygen, and this company is Starbucks. Today, with nearly 35,000 stores worldwide, the company is the premier roaster and retailer of specialty coffee in the world. Starbucks is in the consumer discretionary sector, and currently it has a price of $98.83, and it's down over 15% for the year. Even though it doesn't seem like it's down, because it seems like all of my students are just keeping them in business, especially when I see them walk in 10 minutes late, but they have a full cup of Starbucks coffee. Anyway, Starbucks has a dividend yield of 2.15%, which means that for $10,000 invested, you would have $215 annually. Now, I don't need to convince you that Starbucks is here to stay, but the reason I really like this stock for 2023 specifically is because of how far it's down right now. I believe that Starbucks will continue to just eat up that market share worldwide as it continues to eat that market share within different countries, not only in the dividend annual price, but also in just the overall price of the stock. And again, that's the type of company stock that I'm looking for in a solid foundational portfolio. All right, on to the top 2. And if you found this video interesting and you're ready to take your investing to that next level this year, I think you should consider joining our Patreon group that costs only $20 per month, and you get exclusive content from me. You can ask me any questions and we can chat. And then also there's a group chat with other investors who are taking this seriously as well, so you can see what they're doing. We also do a live Zoom every 2 weeks where you can interact with me and we can get you on track. Click that link down in the description below to see what it's all about, but for now, let's move on to number 2. And that's going to be in the home improvement industry. The reason why I'm so interested in home improvement, and why you should be also, is because the average home in the United States is over 37 years old, which means a lot of things are breaking, a lot of things need repairing, and so home improvement is just going to keep soaring. The company that I like most here is Lowe's. And to be honest, I have a pretty good group of friends that invest in dividend stocks, and I don't know anyone who's not invested in Lowe's. Lowe's has 5-year annual expected returns of 12.6%. Lowe's Companies is the second largest home improvement retailer in the United States after Home Depot. Lowe's has a current price of $206.14, and year to date it's down almost 20%. And that negative 20% just looks like a nice for sale sign to me. Lowe's has a little bit lower of a dividend, right around 2%. Which means that if you invested $10,000, you would have $200 of annual dividends from Lowe's. This company is incredibly consistent, and if you're shopping for anything home improvement, you're really only going to Home Depot or Lowe's probably. The reason why I personally am picking Lowe's is because they're working so hard on understanding their demographic and having incredible customer service in order to really serve the type of person that's coming in those doors. And that's gonna keep those customers coming back and telling their friends for a very long time. Just like Target and Starbucks, I'm big on the type of customer that the companies are going for. All right, we are on to number 1. And this one is by far my favorite. And remember, after I'm done talking about this one, I'm going to explain to you very quickly about how I'm going to be setting up my portfolio for 2023 and how I'm going to invest in these companies and others. So make sure you stick around to that. Now, number 1 is a global food and beverage company that generates $82 billion in annual sales. The company's brands include Pepsi, Mountain Dew, Frito-Lay chips, Gatorade, Tropicana orange juice, and Quaker Foods. This company has more than $21 billion brands in its portfolio. This year marks 50 years of consecutive dividend increases, making it a dividend king. And this one is none other than PepsiCo, with a current price of $180.34, up 4.25% year to date, and its dividend yield of 2.55%, which means that for $10,000 invested into the stock, you will earn $255 annually. Now, obviously, this company is a consumer staple, and I just like how innovative and creative this company is. They're always on the new trends, and they're really working at getting the younger generation. And for a company that I'm looking to invest in forever, I like that their mindset is on the same thing, which is long-term wealth. So now, as promised, here is how I'm going to be investing specifically in 2023, which is sure to be a volatile year. I'll be investing quite safe and pretty much in these top 10 dividend stocks, along with taking advantage of some growth stocks that are also very safe, things like Apple or Microsoft. I'm not taking too many crazy chances right now, but the fact is that with the market down so much, it's like you get to get in on these companies that are already great just at a lower price. So as long as you do your research and you understand what you're investing in, and you're comfortable enough to invest this money, and you should be investing with money that you don't think you're gonna need in the next 5 years or so, then this is just such a good time to get into these companies. Now, as you know on this channel, I love my ETFs, and so the bulk of my investing is still going to be in those ETFs because I think that they're the safest, they give you the most diversification, and they're just so simple. Specifically in dividend investing, I like the fact that you could invest in literally one ETF and never have to worry about doing any more research or stress out that you picked the wrong company or worry that you're not going to get the best dividend around, because this ETF does all that work for you. You can just throw the money in, set it, and forget it. And the one that I'm talking about has actually beaten the S&P 500 over the last 5 years. So if that sounds like something up your alley and you want to learn a little bit more about that, go ahead and watch this video now.